Yahoo still needs a turnaround. CEO Carol Bartz hasn't done it, and now there's a report that Yahoo's board is shopping for a replacement. Investors are hopeful, at the very least, that the company's annual meeting today will shed some light on how Yahoo gets back into the game against Google and Facebook. Clayton Moran is an analyst at Benchmark. He downgraded Yahoo from a buy back in March 2010, has had the stock at hold ever since. Good move by Clay. He's with us on the phone from Delray Beach, Florida. Clay, is there a case for Carol Bartz to stay at Yahoo's helm, or does this company really need to be looking for somebody new?
Well, she has a little bit more time, I think, to make something happen. She's been there 2.5 years now. I would say probably at the 3-year anniversary, she'll need to have shown a lot more progress than she's shown to date. I think the case that, or the scenario where she could stay is if she's able to do something with the Asian assets that unlocks some value over the next 6 months.
So that might be a catalyst for this stock price, which pretty much has gone nowhere, at the very least, since you downgraded it. You look back at a little more than a year's worth of stock history, and it just bounces around right in the mid-teens.
Exactly right. That could be the catalyst to give some relief to shareholders and extend her position as CEO of the company. From an operational standpoint, it's hard to see where she can make a significant change over the next 6 months that would be enough to alleviate the fears and the concerns that really Yahoo is headed towards secular irrelevancy operationally.
Secular irrelevancy, it's kind of like MySpace. What about the speculation surrounding Hulu? Should Yahoo buy Hulu, or in your mind, would that be a mistake?
Well, of course, it always depends on the price they'd pay, and we really don't have any sense for where that would be yet. But Yahoo's history of buying tech companies and absorbing them, integrating them into Yahoo hasn't been particularly good. Hulu is a site that's owned by media companies, and if they were to sell it, I think the content costs would go up meaningfully. So I think there's definitely some integration risk, and there'd be some risk around the cost of content if Yahoo were to buy it. So I'd be a little bit nervous if they did that deal.
Clay, why does Yahoo, more or less at its current stock price, merit the valuation the market gives it? It's pretty much trading at 20 times earnings, but so is Google, and so is eBay. It doesn't really make sense, does it?
Well, the big positive for Yahoo is its Asian assets, which don't really have much impact on the EPS, and so therefore aren't reflected in that multiple you gave. These are investments the company has made where they're a passive investor. They don't consolidate or control the Asian companies, but yet there's significant value there. We'd put the value of Yahoo's Asian assets at about $10 billion, or half the total value of the company.
So is there an argument in your mind for a spin-off, for example, of that Alibaba stake, assuming that's even possible, or maybe even just a divestiture at this point? Even though it is Yahoo's most attractive asset, would it not be better off restructured in some way so that shareholders more directly benefit from it, and then whoever runs Yahoo can figure out what to do with the rest of the company?
Yeah, I do think there's a case to be made for that. Of course, there's other parties involved, so it's not so easy to get done, and Yahoo's failed to do it to date. You know, I think if the company is looking for a new CEO, they might want to look for somebody who is sort of a deal maker, who could exit some of the Asian operations and take the resulting cash and really dramatically transform the operations of Yahoo. That, to me, is the best bet to create a sustainable company for the long term.
So in other words, not the names that have been bandied about, at least in a report by TechCrunch that appeared yesterday, either John Miller, who runs the digital business at News Corp and came from AOL, which itself doesn't have a great track record, or David Kenny from Akamai, who sits on Yahoo's board.
Right. No, not necessarily those two, but somebody, because in my view, the operations face a major secular challenge. They're really losing to specialized sites like Google and Facebook and YouTube and such. The portal strategy doesn't work, so the company needs to really be transformed. And if you brought a deal maker in, he could create some of the capital to do that.
All right. Time for the white knight to ride in on the horse, a deal maker for Yahoo. That's what could turn around this company, says Clayton Moran, analyst at Benchmark. He's got Yahoo as a whole right now.